hold it steady. I'm going to put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Oh, yeah, sure thing.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
Good morning, guys. Welcome back to another live stream here, the A1 Trading Show. It is Friday. We are back in the office for another day of trading, setups, talking shop when it comes to markets. Thank you guys for being here. We've got, 87 people, and I just want to say apologies to the people who were here previously. Just a little bit of context behind the scenes. We have a moving target when it comes to starting these streams. Sometimes we start earlier, sometimes we start later. So today I missed the Empire State Manufacturing Index. So I was late to my own start point. So I apologize for that, but we are here now. That's all that matters. Thank you guys for your patience. And let's talk a little shop. Let's talk about this. What we had so far. Empire State Manufacturing came out cooler than expected. Cooler. Let me show you what this is all about. So Empire State Manufacturing Index, it's the level of diffusion index based on surveyed manufacturers in New York State. Above zero indicates improving conditions, below indicates worsening conditions for manufacturing. So we saw a little bit of cool in that side of things, a little bit worse than expected there. So we'll take a quick look at the dollar and see if anything is reacting. Well, dollar index, not too phased, clearly, as you can see on the hourly chart. Things are trading higher. This is the 1 hour chart on the dollar index. And we'll take a look here and see how it's performing against other currencies. I am long pound USD, so let me go ahead and do a little bit of an update on this. I am long pound dollar. I had a little bit of a tough time yesterday trying to figure out where I was going to trail a stop because I used market structure to trail stops. I entered this position earlier in the week, and then price jumped from here. And I was looking for a stop trailing point yesterday. I liked the idea that this had broken out with a lot of conviction. And while this is pulling back, I'm happy to kind of be nimble with this to a degree. Like I'd be fine if it does pull back further, as long as it doesn't break support here. That's a 61.8% retracement from yesterday's really big move, or the last few days really big move. So I'm happy to hold on to this one. Again, pound USD, I am long. I have been long. So we'll keep a close eye on this one. And this kind of goes in line, by the way, with the S&P 500 trade that I'm still in as well. It mirrors the risk-on effect. A large part of why I've been so risk-on oriented is mostly my bearish idea on the dollar, which has played out pretty well this month and last month. We've seen, again, yesterday we got kind of more solid confirmation. We had a Fed sort of change its narrative over here. We talked about it continuously for like 2 weeks straight. But then yesterday we got more of the same, which really confirmed the idea. Seems like the Fed is not only done with rate hikes, but they're now addressing the idea of rate cuts. So the dollar index is falling, and I think it's still set to continue to fall. Right now, I don't see conditions that really dramatically change this thing bullish. The whole story behind the dollar narrative to the upside was rate hikes, right? Rate hikes as a potential threat on the horizon was the driver for that dollar bullish trend. And if you've watched for a while, if you've been on the show, then you know that at one point we were very dollar bullish. At one point I was very dollar bullish. And then, you know, as things kind of changed, we shifted into the bear camp. And I'm certainly glad that that has been the case, because it's been a lot of pain for the dollar bulls recently. Speaking of dollar bulls, the bulls are having a little bit of a run here this morning. Euro rejecting off of this 1.10 level. Very interesting. The psychological level reacting here. In terms of the euro, though, again, this is a daily chart. Context here overall, still strong uptrend. I'm happy to continue staying bullish on this one overall. I think, you know, if you're looking at euro, the next sort of stimulus package, if you will, for the bulls, I think would be a break and retest of this structure here. We've hit target in terms of where we thought price would go, right? Retesting this previous high. And it seems like we're getting a little bit of a reaction so far to that 1.10 level. Fed just said they aren't talking about rate cuts now. There wasn't any sort of speech, right? I feel like the official statement would have had the top say there. Am I wrong about that? Did he say something that we didn't know about? I'm just going to try and confirm. Can anybody confirm that there was some hawkish talk on rate cuts? Because I don't think there has been, unless I'm just missing something. Technical analysis on GARI USDT. What even is that? What is this? Oh my gosh, it's trading for 3 cents. To be completely honest with you, I don't really dive too far into crypto. And the only crypto I really pay attention to is Bitcoin, maybe Ethereum. Bitcoin overall seems like it's on a nice run. Though, you know, I don't really love, I'm a fundamentalist by kind of my nature. I don't just base trades purely on technical charts. And you might say, well, there's not a lot of fundamentals to Bitcoin. And actually, I would argue there is a lot. Right now, Bitcoin trades like a risk asset. It trades like a leveraged version of the NASDAQ. I think that for the most part, if you were to look at the Bitcoin chart and cross it against the NASDAQ, let's do QQQ, NASDAQ, right? Here's the thing. Down, sideways, up. Bitcoin, down, sideways, up. Just more extreme versions of the same. Bitcoin, as much as, you know, I'll tell you something that got me really disappointed with Bitcoin years ago. I used to own, back in 2021, I took a big hit on the Bitcoin that I owned. So back in 2021, I owned Bitcoin. I didn't really take a hit. I didn't lose particularly money. I lost out on potential gains, like many people. I owned Bitcoin throughout this period, and it ran up like crazy on me, and I didn't sell any of it. I think at one point, I think I want to say it was somewhere up to 60K in my Coinbase account. And then I think I ended up taking all of it out because I wanted to do other things with it. And I also, obviously, I got out in a decent time because it kept going. I think I walked away with like 25 left. Something crazy. Like it dropped just insane amounts. And so anyways, that's another story. The point is, what I want to say about Bitcoin it's a risk asset. And that's kind of how I see it. I'm not a huge, speculator in the space. I don't know if Bitcoin has a massive place in the future. I don't really spend a lot of time speculating on that. So when it comes to cryptos, the whole lot of them, all the little ones, all the big ones, they're all going to follow, I think, Bitcoin for now until something changes in the overall picture. And that could be up, that could be down. I don't know, right? At the end of the day, I think it's a leverage risk asset. And that's how I trade it, or don't trade it, but that's how I view it. If I'm trading something, I'm trading stocks. I understand them a lot better in terms of like indices. I'm trading gold, which I understand I feel a lot better than I do crypto. So I don't really dabble too much in crypto. I might hold some of it just as a kind of an investment, like maybe it works out, but it's going to be a small, tiny percent at any time. Nick, update on your SPY trade. Yeah, let's see how things are going. SPX 500 here. I'm going to pull up the 4-hour chart. Stop is still trailed below about this 46.50 level. If price does erase these gains, that's going to be my signal to get out. If people sell the pivot party, as they're calling it, if that ends up being kind of a sell the news event, well, eventually the news was a buy the news kind of event, right? Fed pivoted and boom, the market went up. But if there's kind of like a post selling that goes on, I'm going to have to cut the trade. But I've been saying that for a month and a half straight now. So I don't know when this trade ends. I'm just trailing. I am tempted to potentially trail tighter. But again, I think right now I'm going to stick to the game plan, which is, I like the fundamental story a lot. I don't see any reason to be bearish at this time. And while that can change, certainly, I am still very much an indices bull. So staying bullish indices for the time being. I've been like a broken record for a little while, but yeah. Nick's S&P trade fits nicely with last month's A1 astronaut space theme to the moon and beyond. Thank you very much. I appreciate it. I've got a video. It is in the lab right now, as in the editors have it. It's going through my all-time performance on my Webull trading account, and I'm excited for everybody to see that. I hope that a lot of you guys will watch that video. I think it's really important to consider the full picture. I've had moments of really great trading. I've had terrible drawdown periods as well. So I hope that video will give you a full picture, but that one should be out, if not today, maybe tomorrow, but we'll see. We got to sort some stuff out behind the scenes. We got some videos to get out. Anyways, quick look at the overall bias. Let's take a look at the EDGEFINDER. We'll rip out the neutrals here for a second. Only bullish plays today. We got German 30. That's the DAX. You got 10-year. Kiwi Swiss franc. SPX 500 staying bullish. Look at that. Just this clean sweep. Definitely love to see that. So yeah. Thoughts on NAS and US 30? Bullish. Staying bullish. Now, I will say, I don't think, in my personal opinion, when it comes to indices, this is not the point to start a position. In my personal opinion, I'm not selling, I'm not buying at these levels. At this point, I am trailing, right? So at this point, it's a hold, not necessarily a buy or sell for me, right? Could you flip 1K to 1 million a year trading forex? Absolutely not. I'd blow every single penny in there. I don't think anybody can do that reliably. Market ignored the news again. It just depends, Steve. It doesn't necessarily ignore it. It only pays attention to it if it's actually exciting, right? So manufacturing index is not historically like one that massively moves the market. And so it doesn't, it's not incredibly meaningful. If you're talking about, however, for example, CPI, if it comes out just as expected, like it did, it's kind of a market's like, whatever. But if it's surprising, that's where it matters. Just remember, with news, it's only as market moving as it is exciting. Even, a really big news event can cause very little market volatility if there's no surprise to the up or downside with a figure or what was said, etc. So yeah, why is the dollar moving up so much? That's a good question, and I think part of it could just be a little bit of a bounce. The dollar has been sold off real hard recently. In the grand scheme of things, it's still very much sold off. but bouncing back a little bit today. We'll take a look at that again in just a second. We've got Kenzo joining us, fundamentalist and technical trader. We'll be taking a look at that. We'll take a look at the dollar, we'll look at gold, etc. with him in just a second. I just want to take a quick break before he comes on. It'll be 30 seconds here to thank our sponsors and some of the great offers they have for you guys here in the audience. Check those out right after this.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with Eightcap. Eightcap is in the giving spirit because they're handing out the A1 EDGEFINDER 100% for free. In order to join in on the holiday fun, just create a trading account with Eightcap, and if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the EDGEFINDER and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with Eightcap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with Eightcap.
All right, and special thank you to our sponsors. We're joined back with Kenzo. Hey, Kenzo, how you doing?
I'm doing great, thanks, and you, man?
I'm doing well, and I just wanted to bring this up for us to react to together, Kenzo. Someone in the audience pointed out that the Fed seems to be not as much interested in rate cuts, and I just wanted to clarify something for maybe people who saw that message. Thank you for bringing that to my attention. I believe it's Mitchell who said that, Mitchell Flats. We aren't really talking about rate cuts right now. So let me just clarify something when it comes to Fed speak or talk or any sort of commentary from Fed events. The Fed is made up of people, and people have opinions. So despite this person coming out and saying we aren't really talking about rate cuts right now, I just have to say that within the Federal Reserve, Jerome Powell is not the only person that makes any decisions, right? There's a committee, there's lots of different people who participate in making the decisions about rate cuts, rate hikes, rate holds, etc. So I just want to say, you know, you might get a little bit of volatility off this. We point out the dollar's up just a little bit. It's not up to any one particular person. Of course, Jerome Powell would be the most sort of powerful in moving the markets. But this is, we aren't really talking about rate cuts right now. He said on CNBC's Squawk Box, we're very focused on the question in front of us, which, as Chair Powell said, is we have gotten monetary policy to a sufficiently restrictive stance in order to ensure the inflation comes back down to 2%. I'm sorry, have we gotten? So that's the question in front of us. And I think, again, you get a range of thoughts and opinions. And again, he doesn't necessarily speak, Fed Williams does not necessarily speak on behalf of the entire Fed. So you do have opinions within the Fed that might be more or less hawkish, dovish, etc. Anyways, Kenzo, sorry for that. I just wanted to clarify that thought for people who may have wondered what that little blip was about in terms of Fed rate cuts. Kenzo, what's going on? I guess last time we spoke, we had seen some news, but we've had more since. What's your latest take on what's going on in the markets?
Yeah, the market has been great this week. So Powell just confirmed everything. So we are continuing on that bullish momentum. So they might not really cut 3 times, but that actually shows the good news. As you said, that it's a committee in the Federal Reserve. So it's a committee, they vote, whether some they will disagree. And unfortunately, some they have the platform to go and answer some questions, maybe on CNBC or maybe Bloomberg markets. And when they ask them, they will just say, no, it wasn't a good idea for him to say we're going to cut rates.
Right.
But in the committee, they believe that it's a good thing to cut. Yes, you see. So I believe in him, Powell, not the other ones. So since he's the one who is the governor, so I will just follow him. And beside that, obviously, the data or the figures that they've been released for maybe 2 months now, they've been going down in favor of the rate cuts. They might not really do that in the first month of the year. Maybe let's say January, February. Maybe they might start it around maybe later or around maybe June, July, going further. But as long as we have that hope, I'm thinking about continuing with the uptrends, especially on mostly the pairs that are going against the dollar.
Yeah, no, that I like that concept. I mean, you have pretty much something that I wanted to bring up, Kenzo, is we talked about gold a good bit the last time you were on, and we talked
Yes,
specifically.
yes.
I've still got my chart marked up from our conversation. We got way more than we thought. I think it's a fair thing to say about the from what we heard from Jerome Powell. We had the introduction of rate cuts, which when we were speaking, mentioned that I did not think he was going to say. I thought, we'd be kind of
Exactly.
we'd be lucky to see him say something like, we're done with the rate cuts, or I'm sorry, rate hikes decisively. I was kind of hoping for that. We got more than that. We got, hey, rate cuts are kind of on the table now. We think, 3. So I think that gave us, in contrast to what we said before, with what we see now, we pointed out that a good dovish tone could set up a breakout for gold. And we did, in fact, get that. The question is today, gold is pulling
Very
back
nice
off the
point.
highs. It's pulling back a little bit. Is it time now to look at gold a little bit more seriously? I mean, as you mentioned, we pretty much had a perfect Fed pivot moment. You couldn't have asked for a better sounding Chair Powell. And then you also had all this data recently that has complemented as well. Is it time to look at gold a little closer? What do you think?
Yes, not only gold, but what we can say now, don't mind all these sort of rejections. That is part of the market. The market won't just run straight up. So the market will actually run, breathe. But at the end of the day, we know that we are on an uptrend. So we're going to have some smaller economic news along the way. Sometimes the market might push lower, but at the end of the day, we are still going to go up. I think maybe in 2 months, we will be talking about different number on gold or any other pair. We might be maybe on 2005, maybe going to a new record. But what I like is it's out there. He said there is a chance for them to cut the rates, even though it's not really happening now, but that is a good thing. And that shows the recovery of the economy. So I see a long-term buy on this. You see. So yeah, on gold, I'm very bullish. Unfortunately, where we are, I can't just buy there. I will wait for a retest, or maybe for the market to break that level, then I will continue buying.
Yeah, and I like your patience on that too. I think it's almost like following through with what we began our conversation with a few days back. We talked about, okay, we need Jerome Powell to have some dovish narrative. We need to see that we can actually draw some conclusions from the cooling CPI data, cooling PPI data. Like, we need to see the confirmations in the Fed speak. We got that. So now the question is, on the price action side, you've had these big pops. I think, in my personal opinion, a pullback on gold is an opportunity that I will definitely be looking at close myself. If we get a retest back at 2000, I think that at this point now is a lot more attractive than it was a week ago at 2000, because
Certainly.
again, you've got now a confirmation and now a little bit of you made a really good point there too about the ECB and Bank of England. We did get some numbers from the PMIs. We've got PMIs coming out for the US as well today. But the German and French and UK PMIs, we saw pretty solid cooling in the ECB, or I'm sorry, in Europe. That, of course, could factor in again to sooner rate cuts. And as you pointed out, gold doesn't trade solely on the US and their rate cuts. It also looks to other major central banks. And if the ECB is going to start rate cutting, and perhaps at some point the Bank of England also joins the picture, joins the story, those are bullish catalysts for gold as well. I think I'm with you, definitely.
Exactly,
I like the idea of bullish setups. So we'll see if we can find them. And please, for the audience listening, I just want to add, as always, when we talk about a setup or an idea, there's no guarantees in markets. Markets are very difficult to predict. But the way Kenzo and I are analyzing this is our educated guess of what is likely
Exactly.
to happen, but there's no certainties, right? So, Kenzo, what else outside of gold, or if you had something else to add to gold, feel free. But anything other than gold that you're also watching?
Yes, I've been following other pairs, especially the ones that they go with the dollar. So we've been taking some very nice trades on US 30, also Nasdaq. On the currency pairs, we were on GBP USD and Euro USD, and it pushed very nice. But for
Mm-hmm.
now, we just have to stay a little bit out, especially Fridays like this. We just need to stay out of the market. Obviously, there are big dogs in the market. So once we see the market selling here, it's not like maybe the market is reversing or something. People, they taking their profits in the market. And if maybe you're taking some big chunk of cash, obviously the market will reverse, but that doesn't really mean that maybe we're changing the trend. The trend will still push the upside. Mostly on all these pairs, Euro USD, US 30, Nasdaq, they're all very high. I can see they are overbought, but we are still on an uptrend. We just need for the market to breathe a little bit before we continue. Now everything's very hot. We just need it to cool down, but we are on a very nice uptrend. Sometimes, unfortunately, we wait, especially on Nasdaq and US 30. Sometimes you can wait for that reversal and they can still fly. Sometimes you can miss a very nice chance while you're still waiting for a reversal, then the market can continue. But that it's how the market is. We are still on bullish, even if maybe we miss something there. A proper reversal can work in our favor.
Yep, that's all good points. And I think, when it comes to indices, I guess, there's this kind of debate that I find to be really interesting right now, Kenzo. Money markets had like record money sitting in them. Money markets, of course, are like CDs at your bank kind of thing, where basically you get a secured deposit and you earn a little bit more interest on it. And they were super wildly popular in 2023 because people were really fearful about stocks and investing and the markets in
Yes.
general. Now, of course, us as traders, now there's something for us to pay attention to because now that money has to come into the system. And there's this great debate as to whether or not that money is going to go into equities, so indices and stocks and individual stocks, et cetera, or is it going to go into bonds? And in my opinion, the answer doesn't matter. Both of those things see kind of, I think that money is coming out of the money markets with this all clear kind of signal from JP yesterday or recently. I think that money market flow, that's a lot of money. I think it was like over $1 trillion
Exactly.
in the US.
Wow.
Yeah, massive money. And if that starts to deploy in the markets, you could really see this continued story of dollar down, gold and indices up. I think it could be really interesting. Have you thought about that or heard about that at all?
Yes, I was also watching that, but I did not really pay too much attention. But I saw a smaller curve where the money market for this portion it was starting to slow down. For the rest of the time, I think it was pushing up. Unfortunately, I don't really have that chart here. It was pushing up very nice, but for now, it seems to be caving. So I don't think they will deposit that maybe to bonds because bonds they like higher interest rates. So
Mm-hmm.
since there is a clue that rates cuts are coming, I don't think they will invest in that. So I think obviously they might invest in stocks, different stocks, obviously, and that might push some of the market. We have different companies they can invest into that. So yeah, we might see a very bullish momentum, especially next year. We might see some very nice push. So I don't really see, even if we have some reversals, I don't think those reversals will be the same as what we saw this year. If we go back maybe on Nasdaq or weekly, you will see that we did have some aggressive sell before that. You can see here. So I don't think we're gonna see anything like this. So even though the market might not really go crazy, but I don't really see any type of aggressive sell going on, especially when the interest rates are cooling. So that is actually good. that is actually good news, actually.
Yeah, it's definitely a story. I think that, you know, the money market kind of deploying into the market and the all clear signal. I mean, I think that there is a lot of times people will look at this and say, you know, this is overbought and it can't keep going. And if you've been saying that, it's been a tough ride, right? If you've thought that the dollar was going to be incredibly strong and have been fighting that trend recently, it's been a tough ride. So I think, you know, is this thing short-term overbought? Arguably so. It's probably due for a pullback. It's probably due for some retracement. And the question is, when does that happen? And I don't know. I think fundamentally it still just supports overall an upward trend until something comes along to shake that up. But Kenzo, I want to thank you for coming on. We'll let you go there. It is a little bit later where you're at. So thank you very much for tuning into the show, helping us out. And also, I just want to say to the audience, if you guys do not already have Kenzo on your YouTube subscribe list, we're going to drop his link to his channel here for you to check out. And if you'd like to subscribe to him, make sure that you do so. It's something that helps out the show here, because our goal is to bring on great talent and people who can add to the conversation, like Kenzo and others. And so we ask that you make sure to go support the people who come on. So Kenzo, thank you for coming on to the show today, man. And we will see you back next week.
Thank you very much, man.
All right. See you, Kenzo. Yeah. Kenzo brings up great points every time he's on. It is very, very insightful for sure. And I hope you guys feel the same. I always appreciate his commentary. So there's a lot of stuff to still cover. I just want to say, in terms of market news, we do still have some stuff that we are holding out for. In 40 minutes, we get the flash manufacturing and services PMI. This will give us a little bit of a look into the economy, both on the manufacturing and, of course, the services side. Services has been pretty resilient. We'll see if we can hold up there. Just a heads up about this number. We'll have Frank to come on and talk a little bit about this in just a moment. But PMIs, if they are below 50, it's usually a sign of contraction in the economy. And above 50, it's a sign of expansion in the economy. And the question that I'm going to bring to Frank is, you know, at some point, we're starting to see rate cuts on the table. Now the question seriously becomes, do we want, for good indices up, gold up kind of scenario, what do we want these PMIs to be? You have to start asking yourself, do we still want cooling economy? How much more cooling do we really want? Yes, the inflation reading is still high overall, but do we really want it to keep cooling rapidly? The question is kind of on the table there. I'll give my quick opinion before we take a quick break. We'll come back to Frank in a second to talk about this. I think you want to see moderate cooling. You don't want to see rapid drop. You just want to see a slight cooling in these numbers to help us along the way down to that inflation number. And I guess there's a whole nother side to this. Did all this Powell pivot talk introduce more stimulus into the system that could actually work against the inflation idea? It's a Game of Thrones as always, but we'll be back to talk with Frank in just a second. We'll take a quick break. Thank our sponsors. I'll be right back after this.
Here's the perfect gift for any trader on your list. Forex Tester is an incredible software tool that allows you to go back in time and trade real markets using their demo account software. You can test your strategies, theories, and your skills on any market at any time. Forex Tester is a great gift for both beginners and for pros because of its unique ability to play out real market trends. While using Forex Tester, you'll be able to speed up the market instantly so you can see if your trade idea worked out right away. You can get 10% off the Forex Tester software right now by using the promo code down in the description below. Build confidence and trade risk-free this holiday season by using Forex Tester, the best way to backtest.
All right, and we're back with Frank. What's going on, Frank? Welcome back to the show.
Hey, how's it going?
Pretty good. Hey, I just want to shout out, we just had that little commercial break from Forex Tester. They are one of our long-term supporters of the show. If you guys are serious about your trading, I highly recommend that you check out Forex Tester. They are the best in the business for back testing. And we've got a promo code, a Christmas promo code here that will get you 10% off if you do decide to get access to their software. It is premium in the business for sure. So there's a lot to talk about, Frank. Today we had one of the Fed officials say that March rate cuts are premature. But I was kind of saying earlier that that's just one person on the Fed making that point. They came on CNBC's Squawk Box and mentioned that rate cuts are, premature. We're not quite there. And in my opinion, somebody was asking about that in the chat, and I want to get your thoughts too on this. Isn't it more important probably to pay attention to the chair who represents kind of the whole committee rather than just one person that kind of has an opinion? Would you agree with that, or what do you think?
Well, I think they all play a part, and what they all say means something. I wouldn't say that whatever Powell says goes necessarily, because he speaks
Right.
for everyone.
Right.
So one person saying one thing and somebody saying another is, I think, just kind of how it goes.
Yeah.
I don't think Williams is wrong in saying that it's premature, because we've been seeing the expectations of rate cuts to be in the back half of the year next year.
Mhm.
So saying a March rate cut is probably premature, but I think that hasn't really changed anything just based on what's going on right now. So the only thing that's changed was the topic of rate cuts was not even on the table up until Wednesday, when they were talking about entertaining the idea that there could be rate cuts at some point. And so
Right.
now that it's being addressed as an actual thing versus not even in consideration is a very different shift in market sentiment, I would say. So I know he's saying we're not really talking about it right now, and it's important for the Fed to remain as cautionary as they are.
Mm-hmm.
So I don't think they're not as excited as investors are, because investors are waiting for that green light. And the interpretation from Wednesday was, okay, that green light is coming soon. And the one of the members, Williams, was just saying it's not a topic right now. I don't think it's not a topic, just because, I mean, Powell, he was asked that question and entertained it.
Mm-hmm.
Before he was asked that question pretty much at every meeting, and he was like,
Right.
no, we're not gonna cut rates right now, and we're not looking at that. So
yeah, I think you made a really good point there too, Frank, because take a look at the two individually and their roles. Jerome Powell has a role where he has to be a politician to a degree. He has to speak on behalf of a room full of opinions. And so what he has to do is he kind of has to take a moderate approach and represent, generally speaking, the consensus, whereas an individual Fed member can have a different opinion and have a stronger opinion and voice it. It's kind of the, when you're the top dog, when you're the guy in front of the stand and you have to, speak on behalf of many different opinions, you kind of have to kind of shoot straight and narrow. Whereas an individual with a different opinion can kind of throw out his mindset on a more strong base that might be different from the consensus. So a good point. I think another thing to ask with that is, markets are flying right now on the stock market side. I know you and I have been watching the Russell a lot. The Russell is just popping like crazy, and the dollar is dropping. But the question is, do you think, if you're looking at this, let's say you don't have any positions on, I know you've got some Russell positions, I do as well. Overall, we are bullish indices, but let's say we don't have anything on. Is this a moment where you are saying this stuff is a little bit overdone? Are you buying, selling, holding, etc., when it comes to maybe the dollar and with the markets? What do you think?
I don't think it's done yet. I'm not buying anything, but I'm still in my positions. Like, I'm still in the S&P. I'm still in my UJ short, which got really close to my stop, but hopefully it has turned around from there, like has found a top, I guess. So when I
Wait, can
say it's
you
not,
real quick, Frank, on UJ? We got to update everybody because you just mentioned it. UJ, you said it came close to your stop. Did you trail a stop?
I did.
Okay. Do you want to
I
just pull it
locked
up and
in
show us?
close to 300 pips, but I think it's like 290 something.
Okay.
And yeah, price got very close. It's just above. Well, I guess let me pull it up. It's I think the 4-hour view is better. It's above these highs.
Mm-hmm.
So like just above this highest point on this 4-hour. It didn't come all the way up, but it came close. So I'm hoping that it doesn't keep going. This looks like a this spike right here was kind of scary, I guess, but when you zoom out, it's just, consolidation, sell off, consolidation, sell off. It's just kind of a pattern right now of dollar weakness. So I think that's still going to continue.
Yeah, and I like something too about this, Frank. So for those of you guys who are just tuning in today, maybe you haven't been watching each day. First of all, you should subscribe and turn on notifications so you can hang out with Frank and I more often. But if you have not been keeping up with it, Frank sold dollar yen a couple days back. Beautiful trade in terms of you caught it like right before the big drop from the perfect, I think it was the best Fed day reported since 2009. So you sold it right before that. So that was a nice moment there. But Frank sold and is talking about trailing his stop just above market structure. And I also wanted to add one thing. You've trailed a stop and you've trailed it pretty tight. But I like the idea because, again, this market has made a really good push. It's probably a fair point to say, okay, we've kind of hit short-term targets, trail a stop in a little bit, lock in something just in case, you get a Friday reversal or something like that. So I like your trade there. And again, I've said I'm jealous several times, but just a reminder, I am still jealous of the UJ short. What were you going to say about the NASDAQ before I cut you off?
So despite of what is being talked about right now and how the discussion is not on the table, the NASDAQ doesn't really seem to care too much right now. It dipped for a little bit, but recovered pretty much, and now it's positive on the day. So I think that in terms of where it could go and how much farther it could run, it's still got a little bit left before it hits I believe those are its all-time highs at 16,765. So yeah, I'm not really looking at, extreme gains from here, but I think there's still a move to be made. And if it does break that, then it's going to have to form another top somewhere. And then that will be the next target in the future. But this doesn't really seem like a move that wants to quit.
Yeah. And, Frank, I just had a thought. I have to say it, even though it's behind the scenes stuff. TradingView indicator where you could track a trade that you're in a little bit. So let me just show you guys on my screen. We've tried to keep it a secret, but we keep talking about it anyways. Frank and we're working on some indicators for TradingView, which we've had a lot of fun doing. There's been some things, TradingView is wonderful, but there are things that we wanted to add, things that we wanted to build in. What if, Frank, you could get, and you kind of have it going with the one of the indicators you have on your screen right now. What if you could create an indicator where you select where you enter into a trade and where the trade either ended or up to current levels, and it drew a little bit of kind of like a stats bar for you without this thing? Because even though I do like the position indicator, it like dominates your entire chart. So what if we could create like a simple or like a more relaxed position tracking indicator? That might be a cool indicator to talk about. Anyways, off topic, but I just wanted to get it in out there because Frank and I, we brainstorm all the time. And if you let a thought go without thinking or talking about it, sometimes you lose it. So just wanted to say that. But do you see what I'm saying, Frank? Wouldn't that kind of be cool?
Yeah. I mean, the candlestick counter kind of does that.
Yeah. That kind of, wait, show Frank's screen again, Chandler, because he kind of had something similar.
So this just tracks, if you're trying to look at like if a true trend is really going on, it counts how many green and red candles there are, and then
Yep.
it tells you how much it gained or lost in that period of time. So if you see like, say you saw like a bunch of green candles and then there were only a few or a handful of reds, and the greens outnumbered the reds, but the overall trend or the percent gain was still down. That's kind of showing that there wasn't really a trend going on. But seeing that the number of red candles
Yeah.
here shows you 29 versus 21, so more green than red. And at the same time, the percent change was 10.3% change. That kind of shows you that. So the green candles, when they happen, are more impactful than the red ones. So there's more upside than downside, showing that there's more candles to the upside. And those particular candles are moving harder to the upside than the red candles to the downside. It's a simple tool mathematically, and you can set it to however many candles you want to set it back to. So if you entered a trade, it wouldn't get your exact entry point, but it would show you from this candle's close to the current candle's price how much has it gained since then. So it's a good way to look at, well, is this an uptrend or a downtrend, or is it a true or false trend?
Yep.
Yes.
Yep. No, that's explained well. Thanks for that, Frank. And I want to turn to a question that I had. Now we're a little bit back on the countdown, I guess, to the PMI numbers. You were listening just before we had you join the call. PMI numbers. I guess, what are you looking for? If you're bullish, what do you want to see out of these numbers? What do you think?
At this point, I think I want to see them get higher, because anything under 50 is still contractionary. But just because, say it comes in at 49.7, we're still contracting, but we're beating expectations. So maybe slowing in the cooling of our economy, but nothing robust. Like, I don't want to see manufacturing come in at like 51.
So you want to see like a 49.7 print. Somebody clip that and see if Frank is right. But I'm not saying you're predicting it, but that would be nice, right? Because then you get still cooling, but you're not, but above expectations. Because at the end of the day, if you're somebody who's trading the indices, you kind of want to see, manufacturing and services still doing well, because that would show that output is still strong. But you also don't want it to be too strong, because then it could be inflationary and kind of slow down the rate cut conversation from the Fed. So it's really confusing.
At the same time, a lower PMI doesn't really. I think that's the question: is higher or lower isn't necessarily the problem. I think it's how much higher, how much lower. So if PMI comes in as expected or lower, then it's still not really. In my opinion, it'll cause some sort of reaction, but I don't think it's necessarily a bad thing.
Yep, that's fair. It'll be interesting to see. Also, in terms of, speaking of, while we're on the topic of indicators, momentum still seems pretty strong on the S&P daily chart. Although I've pointed to this a little bit, I think we might be getting a bit extended. We're probably due for a little bit of a pullback, but it's not something I'm looking to sell. These red dots, all they indicate is that on a standard deviation calculation, we're a bit overextended. However, that can remain the case for some time. What we use these for, at least what I use them for kind of signals to tell me to trail stops a little tighter. And I've done that so far. So I've trailed a stop pretty dang tight, I guess, on the daily chart. I guess I could get a little tighter, but as long as this continues to stay in the kind of extended zone, I will be looking to trail stops further. For those of you guys who are asking about what the indicators are, these are not public indicators. These are A1 kind of exclusive indicators that are not yet available to the public. Let me just drop this in the chat for you guys. If you would like early notice about when you can get the indicators for yourself. We will be dropping that information in our Telegram channel first. If you're not already in the Telegram, we'll drop the link. It is totally free to join and get updates. We also share, Frank and I are sharing trade ideas and analysis throughout the week. So if you'd like to get access to that, here is our Telegram channel right there. So yeah, we'll have updates on the indicators. They will be probably available for people starting in the new year. So we'll have more information about that coming soon. Frank, I'll let you go. Thank you for coming on and hanging out with me, talking a little ahead of PMIs, and then getting us prepped for what could be coming into the end of the week. So thanks for coming on. We'll see you back later.
Thanks. Sounds good.
See you, Frank. Yeah, and again, guys, Frank, we have him on. He's one of our traders within the group. He's also him and I have worked extensively on the software side. We are, at the end of the day, A1 Trading, our company, is a software business. We build software tools for traders. That is our primary way of supporting the streams, and it is, at the end of the day, what we do. We build tools for traders. My background is in software engineering. And so, a couple of years back, that is what kind of drew me into that direction. And Frank has a really good eye for, designing and coming up with ideas for indicators and tools. Hello, A1 family. Hey, what's up? Why didn't the U.S. news yesterday do anything? As I always say, when it comes to news, it's only as market moving as it is surprising. So yesterday's market news, retail sales did kind of move the market, but it didn't move it nearly as much as perhaps the surprise that we got with the Fed speak on Wednesday. We had in the press conference the idea of rate cuts on the table in the statement and in the press conference. That was an incredibly bullish thing and sudden and surprising. So when you want to know, is something going to be market moving? Then the folder color does not tell you if it's going to be market moving. The actual versus the forecast number tells you if it's going to be market moving. Okay. And of course, that's the idea of news. News is only as, if something gets you to turn on the TV, it's usually something very shocking for the news, right? If you're somebody who doesn't usually watch the news, which is like 99% of us, if you're watching the news, it's likely because it's something really shocking. Markets are the same way. We're people at the end of the day. We don't care if it's not really that meaningful change, but if it's surprising, boom, suddenly you have everyone's attention, right? Pound USD, yeah, I am still long. I'm holding on to my position. I am thinking about trailing a stop a little bit. It is Friday. I'm looking at the 4-hour chart pulling back, and it's retesting this area. I would consider trailing a stop a little tighter, but my stop is below the 61.8% retracement. I picked this one long. I shared that signal 3 days ago. Let me see. Frank is still short UJ. I am still long pound dollar. Let me see when I take that trade. December 12th. So 3 days ago, I entered into pound USD. Basically bearish on the dollar, and we got the huge pop, trail to stop, and now we're waiting. Do you think PMI is going to be positive or negative for the USD? I don't know. I am mostly a reactionary trader. I don't try and predict what the news is going to be too much. I like to say I'm not an economist, but I am a trader, right? You can't necessarily say that they're the same thing, because an economist tries to pour through the data and come up with models and forecasts and things. A trader trades what is kind of going on now. So flash manufacturing PMIs and services PMI, if they're objectively higher, that's probably just going to be dollar bullish. Like if they're like both 50 plus, like let's say we got 50 and 51, then that's going to be really probably a dollar spike. And if you get cooler than expected numbers, that's going to be dollar weak. Now, where it gets a little bit more confusing is on the stock indices side, because you got to think manufacturing and services, doing well, that's kind of good for stocks, but we don't want it to be too good because then that might cause the Fed to slow down in the rate cut conversation. Why would the dollar have gone up if the news was negative for the dollar? Oh, you're talking about earlier today where we had Empire State Manufacturing Index. I think there was also at the same time, there was a little bit of Fed talk on Squawk Box CNBC where we got a Fed official kind of sounding pretty hawkish. So there was a little bit of that probably baked in there. This number by itself, probably not incredibly market changing. Fundamentals are tricky, guys. Markets are hard in general. There's always, something unexpected can happen. That's why I don't try and expect or forecast what everything is going to do. I just trade what's currently the momentum in the markets, fundamentally and technically. It's very difficult. You can't possibly know when the next official is going to say something like that again, right? It's very difficult. Where do I want to begin if I want to learn fundamentals the proper way? I would like to hope that this show, if you tune in every day, you'll learn something from myself and from our many guests who speak fundamentals on the show throughout the week. That is the purpose of the show. I personally don't know of any other non-major news network channel that speaks heavily on fundamentals every day and brings on guests that do that. My team does a wonderful job of bringing on consistently the talent that comes on as co-hosts with me, guests on the show. We speak fundamentals constantly. The only way to learn fundamentals, I'll tell you, it's not through reading it in a book or reading it in course material. I mean, you can learn a lot from textbook, economics and fundamentals, but really it's in the action. Like, get a demo account and watch this show and other shows every day that you can pick up a tidbit about fundamentals every single day. Eventually you'll pick it up. I'm sure. Has anyone, can somebody attest to that being true? Is anybody in the audience, have you watched this show? Anybody who's been watching this channel, the stream, the shows, all of our guests, if you've been watching for a while, has anybody really improved their fundamentals from this? I imagine probably a lot of people have come a long way in their fundamental understanding of the market. And I hope that that's a service that we provide to the community totally for free. It's cool stuff to see. We've also, I will say, this is a plug, so excuse my plug. The EDGEFINDER, which is our market scanning software that looks at fundamentals, it is a wonderful way to simplify them down to a simple algorithmic scoring system. This has been built by Frank, myself, and our team at A1. If you guys would like a copy of the software, it allows us to look at smart money moves, what they're buying, what they're selling. We can see that in the COT net positioning and money flow. We have a COT indicator. We have retail sentiment here. We can see what the crowd is thinking. Again, we take this stuff very seriously. This is our career path. We do this every single day. If you're somebody who would like access to our software behind the scenes that helps us to interpret and understand this data, this is where we get it, right? So when I come on the show and I'm speaking about the fundamentals and such, this is the tools that we're using to simplify the search. Instead of searching 15 different articles a day and reading for 4 hours, the EDGEFINDER pulls a bunch of market data that we find very relevant, puts it in front of you, calculates it, computes it, keeps it in a simple format on a table that I think anyone can understand. The score here shows the asset and its overall kind of bullish or bearish calculation based on the fundamental metrics, labor statistics, interest rates, inflation. It's comparing all of the different countries, Europe, or the Euro area, right? The UK, the US, Japan, the major economies of the world are getting automatically factored in here and giving us a bullish or bearish bias. So if you're saying, well, fundamentals are so difficult, it's going to take me 3 years. Well, yes, it will. Fundamentals are going to take you 3 years to kind of feel like you have a decent basic understanding. It's hard stuff. It's not easy. If you didn't go to school for economics, guess what? You got to do a 4-year degree, and then you got to learn how to trade based on it. So it's hard. But if you want help with that, that is where we come in. That is where A1 Trading is a business for a reason. We build tools that help to simplify that process. So again, get a copy of the EDGEFINDER if you don't already have it. If you take this stuff seriously, if you see the value in understanding fundamentals, send us a direct message. There's two things that you can click when you get on this. You can when you direct message us, you can either join our VIP group, which will allow you to see the trades that we're taking with full breakdowns and explanations behind the fundamentals of each trade, and the EDGEFINDER is an option there as well. We have discounts for the holidays going on right now. So if you'd like a discounted copy of the tool, click that link that's in the chat. Message someone on our team. We're a team of 10 people total at this point. We have 2 developers. I have 7 people on my staff, and then of course yours truly. So we've got a team of people behind this. We take this very seriously, and if you do too, and you want to take it to the next level, please consider going down the path that so many others have in this trading space. We have helped a lot of people go from not profitable to profitable. It's something I'm really proud of. Obviously, we're excited about it every day for a reason. We've helped a lot of people, and that's really, really cool for both myself and for I'm sure that the team that's listening and behind the scenes, right? We've I think taken this stuff seriously and shared the good word, the serious approach to trading to, at this point, millions of people. And I think that that's really cool. Anyways, guys, we've got just about 10 minutes to go before the PMI numbers coming out. So we'll stick around for that. We'll talk a little bit more chart setups. I apologize for the plug there. I did get a little bit, I get excited about this stuff. I get excited about why we're here at the end of the day. I've been doing this for, I started doing live streams in my college bedroom in 2018 or 2017. I think it was 2018. But it's been a long road, and I'm glad to see where we've come since then. Is it possible to be an FX trader and a stock trader, thinking fundamentally what affects FX might not have the same effect as stocks? Adele, that's a great question. But I would actually say a lot of people love to love on one and bash the other. But the reality is they are moved by the same things for the most part. The Fed moves both stocks, indices, and even cryptos. Indices, stocks individually, sectors of the stock market, cryptocurrencies, FX currency pairs, right? Everything is actually kind of connected in some way or another. I would say that one of the biggest connecting vehicles is actually the bond market, the yields, because this is talking about, Fed monetary policy is really reflected in this yield chart, which then extrapolated out goes to indices, FX, currency pairs, etc. Like a simple fundamental breakdown is that the Fed is looking to cut rates, while the Bank of Japan has been, jostling for the idea of rate hikes. That has changed the narrative on the dollar yen, and that's why we've been bearish. And I know, I'm pointing just to this one as a good example because this is, of course, a straight up trade that Frank took inside of the group. In fact, I bet you he mentioned it. He said, I'm taking a short on UJ after today's performance on the 1 day. CPI suggested weakness in the US as the benchmark declined further. Fed rate hikes, rate cuts. He didn't mention it, but I know we've talked about it extensively, is the Japan could be starting. Yeah, there it is. Again, with every trade alert that we send, we share breakdowns. And so Frank pointed out here in this, going back as early as December 7th, which is my birthday, also Pearl Harbor Day, talking about Japan. Frank, that is not tasteful. Kidding. Japan could be looking to rate hike. So you kind of get a contrast in the two. I've got a message from James. Let's see what James says he has news. James, we'll do it after. We'll do after the PMI numbers. We got 7 minutes to go. So James is going to do our news today after, which would be great. Also, I mentioned it earlier, but if you guys aren't in our Telegram chat, come join us. We'll drop the link here in the YouTube chat. It's also in the description. Dang, Frank's getting some love on his UJ trade. You know, sometimes I wonder, why does Frank's messages get more thumbs up and fire emojis than mine? Are you guys trying to tell me something? Maybe just change the channel to Trader Frank. I'm kidding. We both get our fair share of support from the community. We appreciate it a lot. Anyways, yeah, UJ still looks great. I wish I had that trade. Pound USD I do have, and I'm juggling with the idea, like, do I want to trail a stop tighter? Fundamentally, I still like this pair quite a bit to the upside. Bank of England seems slightly more hawkish, as it's still got to deal with its inflation compared to the US. US still does as well, but we could go look at inflation. Let's do this. GU. So we want to pull up. I'm going to search for GBP. Oh, you know what I can do? This is really cool. Watch this. Pound, dollar. Okay. So within the Edge Finder, for those of you guys who don't know this, if you do have a copy of the Edge Finder, check this out. You can go to the inflation section, click forex pairs, and I've just selected the dollar to compare it with the pound. So if you have a copy, try this. It's cool. It's actually really useful whenever you want to look at inflation metrics. You can just compare. So I've got both areas are seeing inflation cooling, but what you'll see is that inflation has been a little bit more of a stubborn, persistent problem for the UK compared to the US, which is in blue. So US's inflation was high. It's still high, you know, compared to what their target is at 2%, but it's coming down. It's coming down for the UK as well, but it's still a more stubborn problem. So when you look at that, you say, well, their central bank might have to stay a little longer on the rate hike side, or at least at the higher rates level they held in their recent decision. It makes the pound look a little attractive. Frank is invited to the cookout. Frank is a cool dude. He is a cool dude. Everybody loves Frank. Everybody freaking loves Frank. I get it. You don't have to remind me. Frank and I grew up together. For those guys who don't know, we were childhood friends. Well, I was friends with his older brother, and I used to hit Frank with a baseball bat. I'm just kidding. No, but he was the younger brother effect for a little while, and it's cool that we ended up, you know, doing this stuff together every day. We've talked markets together since the end of high school, so it is very cool. Nick, does your business include customizing an EA for MetaTrader? No, we don't really. We don't do a lot of MT4 custom coding or anything like that. We do have some indicators that are built for MetaTrader, but we've really shifted to building the Edge Finder, and we build TradingView tools as well. Will you be making a subscription-based payment method for the Edge Finder for the iOS, Android? If you guys do not have the Edge Finder and you would like a payment installment option, we do offer that. And if you would like that, we'll drop a link here in the chat. If you're somebody who would like to pay for the Edge Finder over time, if you want a copy of the tool, but you're like, I can't pay for it in one, split it up, send us a direct message. We'll help you do that. Someone on our team is happy to assist you with that. We'll drop the link here for you. Just chat with us on our website. So when you go to the website here, you can go to a1trading.com. Chat is in the bottom right. If you go to this, click chat now, ask them about the Edge Finder, VIP or whatever, and just ask to pay in installments. And someone from our team might be able to work out something for you. Again, there's the link. Thank you guys for dropping that. Link is in the chat now. So if you are interested in getting the Edge Finder, but you're like, hey, can I pay it off in like pieces? We do have some people who can help you out with that. Guys, we are just about a minute and a half from our PMI release. We've been streaming for 1 hour and 10. It's gone by quick today. Pretty quick for a Friday. I got 440 people watching on a Friday. Usually Usually people are done for the week by now. So you guys are as degenerate about this stuff as I am. So shout out to you. I'm kidding. Don't be degenerate about this stuff. It's great that weekends exist for traders. I will say that. I still do a lot of work over the weekend, but it's far less stressful. When I say work, I mean both A1 stuff as well as trading research and stuff while the weekend is on. I don't buy the EDGEFINDER. I can see it in your live streams every day. That is true. That is true. You can always watch in the live streams. But if you want something more specific, if you want to pull up a specific scanner or seasonal data on something particularly, or COT data, and you want to go through it more specific on a day that I didn't go through it, again, there are perks to actually owning the tool. And also, low key, it's kind of cool to support a business like ours that does free stuff. I'm just going to say it. I try and do that when I can. Try and support a business that is, offering great value. But you're right. You could watch it for free and be the kind of person who doesn't want to support us. I get it. I'm just kidding. You absolutely do not have to. The streams are free for a reason. We got PMIs coming in. Breaking news. Sorry for the late line. All right, PMIs coming in here. Again, we're waiting for manufacturing and services. Manufacturing came in lower, 48.2. And 51.3. Okay, so a little bit mixed. One cooler than expected and one hotter than expected, 51.3. And let's see how that is impacting. Taking a look at NASDAQ. NASDAQ up on the 30-minute. Take a look at S&P. Take a look at gold. Quick look at dollar as well. Dollar kind of flat. Somewhat makes sense. You had one cool, one hot. So that's going to be a bit mixed. I would say that this one, 48.2, it's a bigger 1.3 less than expected. This one is 0.5 more than expected. Seeing a pretty flat reaction. Here's euro, pound. These are 5-minute charts, by the way. UJ. Pop, then drop. I love your humor, Nick. Thank you. I've always wondered, I think I would be, I always kind of thought if I was to do like a stand-up comedy, I would probably like 90% of the audience would not laugh. But then there'd be like 5% of the audience that like, they would get it, my stupidity. I have like the dumbest kind of humor. You know what I do? Here's one thing. Can we fun Friday poll? I'm gonna do a really hot topic poll. This is totally off topic completely. If you guys are in the Telegram, get ready to vote. If you're not in the Telegram, we'll drop the link for you to come vote. I'm going to be doing a poll here, and I'm just curious. I'm curious to see what you guys say. Is watching people get hurt funny? This is really random. Yes? No. I mean, I don't know. Actually, I here's the thing. I do kind of find those like blown account videos oddly amusing, but I don't think that that's the same thing as like somebody falling off of a bike and getting like their face broken in half. Like, I'm just curious. Come vote for this. I've always wondered this. What do people think about this? I don't think so. I like when people see, to me, that's like cheap humor, like someone falling down the stairs. That's not funny. But if somebody's account is getting absolutely blown up, then that's not hurting anybody, right? I'm kidding. Those videos, though, I mean, come on. It's only funny when people blow up their accounts because it's somewhat relatable, and I think we can learn from it without it just being a depressing thing. Anyways, I'm getting I'm running out of topics. That's why I asked that question. If you guys would like more polls in the future, make sure to join the Telegram channel. It is free to join. Everyone, I think it's hilarious if it looks funny. It just depends. My wife loves to watch people get hurt. Remind me never to make your wife mad. Yeah. Anyways, we got James in the building. He's going to do our news now. Anybody who said that watching people get hurt is funny, you were wrong. And that's going to be a wrap on the analysis side. But we'll go to James. Hey, James, what's going on?
Hey, so you don't like people getting hurt videos?
Well, here's the thing. I realized as I wrote this poll how much of a hypocrite I sound because I find the videos of people blowing their accounts hilarious. Not necessarily like I realized like, wait, I'm sitting here like, oh, that's not funny. And then meanwhile, there's like 50 videos on YouTube of me reacting to like people blowing up their accounts. But I think it's more like their reactions, like, and you're not getting physically. I'm always just sitting there wondering like, oh my gosh, that hospital bill is going to be atrocious. But I don't know, James, what do you think? Is people getting hurt funny, or is it kind of a depends moment?
I think that there's a line that once you cross a certain line, then it becomes unfunny.
That's fair.
Like, falling over, minor injuries can be funny, but if someone is getting pretty banged up, then I shy away from it a little bit. Like some people are really into like sports injury videos, real big hits, real bad breaks, things like that. I personally can't handle that kind of stuff. I don't like that kind of stuff, but I enjoy a little kid falling off the slide every now and again, something like that. Something innocent.
That's fine. I feel like if it's like a creative, like that is just ridiculously unexpected kind of like hurt, I find that kind of funny. It's more when somebody's like straight up, they just like lost their arm or something. I'm like, that is terrible.
Yeah, no, I don't want anything to do with that.
Yeah, fair enough. All right, James, you got the news for us. I will I'll give you the floor here for a bit to go over the news, and then I guess we can wrap up for the week. So take it away.
Sure, sounds good. All right, guys. So we have some news to talk about. It is Friday, so it's the end of the week, but not the end of the news for 2023 by any means. We still have a few more things to get through, and then we'll be off into the new year. So here's what all the important events that we have coming up next week. Starting off on Monday, we have Australian monetary policy meeting minutes, as well as in Japan, the Bank of Japan is handing out their monetary policy statement. So that's both happening on Monday. Tuesday, Canadian CPI numbers. Wednesday, UK CPI numbers, as well as CB consumer confidence here in the US. It is a slightly lighter news week next week compared to the last 2 weeks. Things are certainly going to slow down just a little bit, trading wise with everything going on, holiday season and whatnot, and kind of the end of the year wrap up. But there's definitely some more important stuff ahead. Like on Thursday, we're going to get our final quarterly GDP numbers here in the U.S., as well as unemployment claims. And then finally, to finish up next week, we have retail sales in the U.K., Canadian GDP numbers, as well as core PCE price index and revised University of Michigan consumer sentiment. So certainly a lot of potentially market moving stuff happening next week, but not quite as busy as the last 2 weeks. But again, to be expected with the end of the year right around the corner. So what else do we have? We have the European. Okay, so I saw this, and this was pretty interesting. So the European Union has agreed to open membership talks with Ukraine. Ukraine's President Zelensky was quoted calling it a victory. It's a big deal and a good thing for Ukraine to be partnering up with the European Union. This could certainly help them with their ongoing struggles. However, Hungary's Prime Minister Viktor Orban, who has the most like stereotypical 90s action movie bad guy name I've ever heard in my life, Viktor Orban, blocked a proposal made by the European Union to revamp their budget and include a 50 billion euro support fund for Ukraine. So essentially, President Zelensky met with members of the European Union. They extended a membership to him. He was very excited. He called it a victory. It was going to be great for him and the people of Ukraine to be aligned with the European Union, certainly offer a lot of support with their ongoing fight against Russia. However, Hungary's Prime Minister Viktor Orban, who is a known ally of President Vladimir Putin, blocked the proposal of a 50 billion budget support thing for to help fund Ukraine. What else? We have Biden called for Israel to scale back their attack on Gaza. Instead, he believes they should focus on smaller, more surgical operations to combat Hamas. So obviously, you know, similar with the Ukraine and Russia situation, Israel and Hamas, no signs of slowing down there. Still large-scale attacks and bombings being dropped on Gaza that is heavily Hamas-controlled at the moment. However, President Biden believes that there's been too much destruction and it's really not getting them anywhere. So that if they really want to combat Hamas, that they should focus on smaller, more strategic, operations to kind of cut Hamas out of Gaza. U.S. National Secretary Advisor Jake Sullivan met with the Palestinian president Mahmoud Abbas to discuss post-war plans. Those included, how are they going to continue to incorporate Palestinian people, in that area if it does, if Israel does in fact kind of take control of Hamas, what do the Palestinian people do from there? The Israeli Defense Minister Yoav Gallant told Sullivan that it would take many more months to take back Gaza from Hamas. So again, lots of conflict still going on over there. It's a really scary situation, and this is what President Biden has called Israel to do, because Israel is destroying Gaza pretty badly. But let's talk a little bit of charts. So this is a screenshot of the market heat map that I just took right before hopping on here. I just wanted to show off this a little bit because we can see the market heat map is a really cool feature in the EDGEFINDER, because you can see what percentage either up or down assets are trading throughout the day. And it's getting updated every 15 minutes. So I grabbed it right as it was updating. So it should be pretty up to date with what's going on right now. And so we can actually see that our biggest mover of the day, currency-wise to the upside, is actually CAD CHF. It's up 0.3%, which isn't a huge move, but overall it seems to be a pretty bearish day for markets. We're seeing a lot more red than we are blue. We can take a look at indices as well. JP225 and NASDAQ are really the only two trading up right now. JP225 up 0.87%, whereas the NASDAQ is up 0.28%. Then we have the German 30, S&P 500, US 30, and UK 100 all trading down. So kind of a mixed day for indices, but kind of not a great day for currency pairs. We can see stuff down here like Euro CHF, Euro NZD, Euro USD, Euro JPY, Euro CAD, all trading heavily downwards, with Euro CAD being down 0.79%. And then it's cut off just a little bit down here at the bottom, so I don't have the exact number, but Bitcoin is our biggest mover to the downside, which is often the case if it's either, moving up or moving down, because it moves in such giant moves that if it's up, it's usually up a lot, and if it's down, it's usually down a lot. So that's what's going on inside of the currency world. And lastly, this one's kind of for Nick. If you guys don't know, Nick is a big history buff. So is my mom. Funny enough, my mom went to Boston for the 250th anniversary of the Boston Tea Party, which is happening tomorrow, December 16th. 1773. If you are not American and you are unfamiliar with the story of the Boston Tea Party, Basically, as we were, forming the colonies and whatnot, and we were getting occupied by the British, we were like, hey, we don't like you taxing our stuff. And tea was a pretty big deal back then. And they said, you know what? We don't want you taxing our tea. How about we just throw it in the ocean? And so that's what they did. And then they threw a bunch of tea in the ocean in the Boston Harbor. And now we celebrate it. And tomorrow's the 250th anniversary of it. And so because of that, my mom flew to Boston to throw tea into the ocean. So that's happening tomorrow. Chandler loves his sweet tea. Tim, I saw you leave a comment earlier about Chick-fil-A. I don't mean to make you jealous, but if you want Chick-fil-A, you should go get it. So yeah, that's happening tomorrow as well. That's all for me. So we will wrap it up from there. Hope you guys have a great rest of your day. Thank you for watching the stream as always, and we will be back next week. We're getting close to the end of the year, but we still have a lot more stuff to cover. So we will be back next week on Monday with another live stream with more news and markets to cover. So we will see you then. Have a good day, everybody.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.